Inflation remained at 2.7% in December as high prices continue to weigh on many Americans. That's the inflation data out on Tuesday. And that comes with news today that Donald Trump is going to put a cap on credit cards at 10% APR for the year. So that's, you'd think, kind of like a good way of getting the Fed to move faster to address this interest rate thing, right? You know, it's okay. So in investing and trading and economics, you have these things called models that are based on economic theory. It's kind of like saying, you know, if the Fed puts interest rates up, then this model says that the economy will slow down a little bit, which creates this effect, which creates that effect. And that's all based on normal economic theory. And sometimes, though, these models go out the window completely. And there's a term was coined for that sometime, I don't know when, sometime in the last 35 years or so, called freakonomics, where economic outcomes happen that only kind of in retrospect can you see are what would have happened. And it's like, that's not economics, that's freakonomics. Can't actually think of any great examples off the top of my head, but there are so many of them that was a book that was written was called Freakonomics. I went on about loads of them. Now, in this case, you would think, right, okay, so 10% cap on interest rates for credit cards. We don't even need to wait for the Fed to cut the base rate. We're the consumer, you know, and the president's going to put a cap on interest rates for credit cards. Yeah, that looks like great news, doesn't it? It's going to help the economy and everything. Except the way that markets are reacting as we see gold and silver at all-time highs, silver having put in a high today of over $90, which is really, really nuts, is not like the markets are responding to this news as being like, oh yeah, this is going to be great for the economy when everything's flooding into safe haven money. That's how it sounds like one of those freakonomic type outcomes. And when you think about it, if you put a 10% limit on what you can charge on the interest on a credit card, then all the credit card companies are only going to give credit cards to the people who kind of have the credit rating for a 10% credit card, which, as we know, isn't really all that many people, which means that they'll be giving out way less credit cards, which means there'll be a credit crunch, which means it's bad for the economy. And that's why the markets reacted the way they've been reacting today. SPX is dumped hard. Now, you maybe would think, oh, in the face of like decent inflation data, that gives the Fed more opportunity to look at the jobs data because they've got a dual mandate. You have to do two things. You know, you have to look at what the interest rates are in order to keep inflation at target, and what the interest rates are in order to keep the people employed at target, which is, you know, full employment. And you think, well, if there's pressure on jobs and less people have got them, then they're going to cut the interest rates, which would be good for the economy. But, you know, there's not been that really cool print yet. And this is coming into the end of Jerome Powell's tenure as the chief head honcho of the Federal Reserve. So what you have is a situation with Donald Trump, who wants to fire the guy, getting people out there to, you know, try and do him like Al Capone on some other thing. So they're chasing after him for some renovations he's done. You know, he hasn't done his bills properly. Let's put him in jail for that, even though we know that he's doing this other thing that we want to get him for. That type of idea. And it's this massive standoff is happening. It's more freakonomics. It's less kind of like, oh, what do you think might happen in a situation where this is happening in textbook on the paper? Here we have a model. President of USA says something, it happens. That's the model. And then you've got like the kind of when the model fails, and you have to go back to like the actual base level of theory. And there's kind of, you know, two ways of looking at the future. One of them is you look at the model and says, well, things be like this in the model, so this is what the future will hold. And another one is where you roll up your sleeves, you put on your thinking cap, and you do a bit of the hard work yourself and try and really figure out, using the theories to come up with answers that might defy the model which is accepted. So if the model which is accepted, for example, on cryptocurrency over the last couple of weeks really was actually that it was going down, then what you need to do to kind of come up with a way of figuring out what's really going on, if it's going to defy that model, is get stuck in, look at the work that you have to do and do the work. You know, don't just apply it to some model that somebody worked out in a textbook in 1988, but do the actual theory work yourself. Oh. It seems like a daunting challenge, doesn't it? And it is. And that's why most people don't do it, and they don't make money in markets. We're going to be talking about cryptocurrency in today's show as well. I've got a chat that I'll bring up from the Discord, which goes into detail on cryptocurrency and kind of, you know, how you can do that and see what's happening and be safe about it and predict the future. Yeah, predict the future. But in a way that not everybody else is predicting the future, because it defies the current model of the time. Today's show is going to have lots of that sort of stuff in it, and it's also going to be a nice, quick and easy show. Okay, folks, so we're going to enjoy it, right? It's going to be good, and I do want to see some audience interaction. If I don't get enough during this, as I'm recording it with my live audience, then you, as the viewer watching now in the recorded later version, give me a comment down below so that we can bring it into the show next week and talk about it, because I want to get more of your comments in the chat. And you've got some good comments out there, folks. I do know you have. I see some in the chat box, in the chatty chat box already. Got some nice support coming in as well, and a shout out to Dash EC, who supported me with a tip before the show even kicked off, right? So how cool is that? Some people really get in behind what we're doing on the channel. Woohoo! Okay, so welcome to the show, everybody. My name's Rocky Outcrop, by the way. I do this all the time as a pro to help people become better at their job in the markets, which is to make money while being safe, making the right decisions, and not looking back at them later on, regretting them, thinking, what the heck was I thinking? And the only way to get around that, really, is to have a great base of knowledge and the experience and a guiding hand and a mentor. And it isn't really to watch people with like a rented Lamborghini in the background telling you how to make money from dropshipping. So what we're going to do here is we're going to do the hard work, but it pays off in the end. And I've got proof of that. I've got proof of that paying off in the end. We'll talk about that in the show, because we did that with the cryptocurrency chat. And we're going to bring on, you know, my screen here. So if you're just new to the show, what we do here is we use a screen here to talk about news articles, the macro picture and the economics and investments in the world. And we dive down and deep and dirty and get into the nitty gritty. And today's show, I think, really, despite all the things I've said so far at the start, this really should be a shout out to the analysis that I've done over the last few months, right? Because, and it's still ongoing. It's kind of I'm a bit conflicted. Do I talk about it as if it's a fait accompli already, something that's happened? Or do I talk about it like as an ongoing thing? Because it really, truly is. And wait until it's fully finished before giving myself the full round of applause that I deserve. It's hard to know, because if you saw the title of today's episode, then you'll know that there's something I've not spoken about in this chat so far. And it isn't this news about inflation here. It's to do with the Russel outperforming the S&P 500. Now, I'm not seeing a news article here, which is just going to make it so that we can make it easy for me to talk about it. And the reason I'm not seeing a news article that makes it easy for me to talk about this is because we're the only ones that are talking about it. So there's so none of the big media are out there mentioning this, but it's an incredible record that stood since 1990. Yeah, 1990. And what's it to do with here? It's the Russel 2000. Now, I've been harping on about this for a long time, and the what we've seen over the last stretch of days, last 9 days, is that the Russell 2000 has outperformed the S&P on those days, including today, by the way. And that means that by doing better, outperforming consecutively over a period of days, pretty much 2 weeks, It's beating a record that stayed in place since the 1990s. Now, who on planet Earth was talking to anyone in the world, apart from me, right, for the last few months about how this is going to happen? Who in the entire of planet Earth? That's right. No one. Not a single person. And so much so it's not even in the headlines. I did see it as a headline in one of my trading platforms that's got a news thing on it. So I'm not actually seeing it in the headline. Here, so let's just see if I can find where I saw that link at so that I can bring it up for people. It's pretty cool. Like, the fact that I said this for a long time and then it has been happening is pretty cool. Copy link. What's the it's on some website called swissinfo.ch. Well, let's go try and find that. So it's, if no one is talking about this, I'll just put the first line in from the article. It drove a rotation out of the tech mega caps that have powered. See if that brings it up here. Yeah, is this the article? Okay. Made it there in the end. A week-long rotation that has seen investors bail from richly priced technology names in favor of more economically sensitive industries picked up speed, sending the Nasdaq 100 to its worst drop in a month, while lifting the majority of companies in the S&P 500. While the S&P 500 saw its first back-to-back losses in 2026 amid a slide in all the Magnificent Seven shares, almost 300 of its firms rose. Small caps continue to outperform, with Russell 2000 beating the US stock benchmark for the 9th straight session, matching the longest streak since 1990. And of course, you know, doing that today as well continues that on. The first weeks of 2026 have been marked by a steady rotation out of giant tech companies whose all-weather earnings made them safe bets at times of economic uncertainty into a broader category of firms tuned to improving growth prospects. Oh my goodness, what a shock headline. And nobody else is talking about it. Well done. I mean, hats off to these guys for being the only ones in the world. Maybe the person who writes this article subscribes to my channel. I mean, that's always possible. It could be that I'm the one that gave it to the ideas, or it could just be me doing things like putting the information out there in the first place allows ChatGPT and so on to find it, and then they suggest it. I see that from time to time happening. I think, you know, something that I'm very much ahead of the curve on, and then a couple of weeks later, a few weeks later, it starts coming out. So yeah, that's the news. That's massive news, by the way, massive news, and it flies in the face of the safe haven chat, right? At the same time as it flies in the face of the economic picture. We know that the theory then allows the Fed to hold rates if it wants. The markets are pricing that 95% chance that on December 29th, when the Fed meet again, we get another hold on interest rates. But there's this kind of question in the background that's looming, okay, and it comes up because of silver. So let's dive into that now. And by the way, if you're wondering, you know, you're at the minute way ahead of the curve in terms of what everybody else knows, which means that as 2076 progresses, you'll start to notice other people catching up, whether they're finding out what you knew in January in March, or you know, they're only finding out about the way the world really is operating come the end of the year. You'll be ahead of them. And a lot of people, I was speaking to people about this in December, have been feeling like they were trading 2025 like it was 2024, and that was obviously wrong because it was 2025, by the way, but it's not 2025 anymore, which people need to I mean, this sounds like stuff you don't need to hear, except when you get to December and you realize that that's what you've been doing, you wish you'd had somebody at the start of 2025 like myself trying to help you bring you along to the way the world has actually changed, so that you're ahead of the curve, because you need to be ahead of the curve. It's just like anything that's a top performance thing, like sports, Formula One, or any top sport, really. If you're not ahead of the curve, you're behind the curve. And there's a binary system. Either you're making money and you're ahead of the curve, or you're behind the curve and you're not. And that's just the way that is. So that's what we try and do in the show, and that's what we're doing here. So that's why it's interesting to talk about these things, like this, for example. And you might be wondering, if you're a regular viewer of the show, why I had the monthly chart open when I opened up here. That's the Russell's, by the way, chart. What we're going to bring up is silver. I'm just going to make it easy for all the noobs that are watching by typing silver into TradingView here to bring up the silver chart, because you can do that. A lot of people are like, oh, what's the I wish I had Walter White on speed dial so I could ask him what the chemical elemental number for silver is, so I can put it into my TradingView and work out what that is versus US dollar for the ticker symbol. And they stress out, just type the word silver in. Okay, it's all right, let your hair down, nobody's watching you. So this is the silver chart, and look at that chart, right? Look at that chart. That's the monthly chart for silver, and this could be said to be rather bullish. Now, the thing about this is, obviously, silver, gold, all that crack, safe haven stuff. Safe haven stuff. I mean, look back to at times in the past when there was big moves into safe haven stuffs like this, and we then can kind of think like what might happen after there is a retracement of sorts. And I thought what I would do for people is show them not just like this one that was within their actual adult lifetime living memory back from 2010s and so on. I'm going to go back a little bit further to darker days of economic times to talk about the fear that exists in the back of people's lizard brain minds when they're looking at markets right now and trying to think, oh, what's happening? And this is, of course, directly to the idea of disconnecting model from theory and then reconnecting it right back up again and asking, does it apply or not? Because this silver chart from 1979/80 showed something happening in January of 1980, and that was a while ago, right? This was following a bailout for countries like the United Kingdom from the IMF in 1979. There was big stuff happening in the world back then. In the previous years, what you'd had was gold being the dollar being pegged to gold, in a sense, right? Just using modern language, that there was the gold standard, and if you went into a bank, you could get given a little pouch of gold if you handed over a gold bill, sort of. And that stopped. Following that, there was a huge crisis in inflation, which is a word you might have heard from recent times, where the commodity prices put in highs like that you've not even seen since. If you were to look up the price of cocoa, for example, then you'll see that the all-time high in cocoa came in the late 1970s. Now, what? Yeah, that's right. There was a time that land is forgot when dinosaurs like Reagan and Margaret Thatcher walked the lands and made the policy for the countries to try and cope with the aftermath of this inflation crisis. Now, there was a little bit of a lack of foresight, right? Just like, when you close down all the artisan shops, then the blacksmiths and all the rest of it, then 100 years go by and you try and get a blacksmith to make a gate for you. You discover it costs you multiple thousands of dollars, and you're like, what the hell? This is so expensive for a simple gate. I thought people did this since 1400. And it's because people did it back in 1400, but they stopped doing it. And they lost the skills, they lost everything. And so there was a little bit of a lack of foresight, as we see that people like Scotland, that had one of the biggest boat building industries in the world, has had a 20-year delay on a boat that it's building, and it's cost something like $500 billion more to build the boat. And it's a boat, right, that's supposed to take people from Scotland. This is a relatively small country, but it's a big land mass, right? It's like Canada in that way. And we've got this island where people live, and they need a boat to go between here and the mainland. And for like literal lifetimes, they've been asking for this to happen. But when I say literal lifetimes, I only mean really one lifetime. And if you look back to when that lifetime began, it was when the end of the shipbuilding in Scotland, actually its life happened, and that's at this time back in the 1980s, right? All of that got chucked down the toilet, and it's the type of complaint that someone like Donald Trump these days has about the economy. Now, I'm not saying that Donald Trump is complaining about Margaret Thatcher. I'm sure Donald Trump and Margaret Thatcher would have really banged, like they'd have been hot stuff. They'd have loved it. Hot oil wrestling, we're in really, you know, big views on YouTube. But with regards to shutting down certain things, you can see that there's a Atlas Shrugged style kind of mentality in the US at the minute, where they're trying to revive the industry and bring it back to sort of older standards, like even to the point of putting tariffs in and talking about getting rid of income tax like it's actually is the 1800s again. So there's looking at the textbook written in, say, 1995 about how economics works might not really fully capture what's going on. But if we look at economic theory and how these things work, they're based on what happened in the past. And look at it and say, well, if we can understand that, that's supposed to be what the theory was that led to these events. It has different permutations. Let's look at some events in the past then and try and think about what happened. And if we look here, we can see in the 1980s that there was a massive rise up in silver. In fact, you could look at that rise in silver and you could say that if you look at it, like there it is in the chart there, 1980, if you look then over to the right and you try and find when prices went back to it, it wasn't until 2011, right? 2011, yeah, that's right. 31 years later, 31 years, yeah? So let's just call that a lifetime. Maybe I'm using caveman lifetimes, okay? They might be not like, or they might be central Glasgow in the Gorbals lifetime, right? Maybe not the lifetimes that my primarily American healthiest country in the world 80-year-old average lifespan people are used to. They're thinking, Rocky, what are you talking about? I'm talking hard life lifetimes, talking central Glasgow. So this is 31 years later at highs again. A lot of Glaswegians did live to see that high from the 1980s, and then some of them even here, if we skip forward another 14-15 years to where we are now, actually are seeing it going up crazy again and breaking that. When did it break it? Back September, October time, when the metal started really pushing past their highs, and then of course it's up there. But you can see this is obviously significant. So I'm looking back to the really important period of time. So if we look over here, we can see that there was this high. Now if we then go to the SPX, right, and go back to 1980 in January and ask a question, was it good? Spoiler alert for anybody. No, it wasn't good. It's got names. People to give these things names, when this stuff happens. They want to remember it. Of course, we get born. They all get dementia, and nobody remembers it, even if they give it a name. Anyway, we can call it like the 1980s. And we can see here that in November, right, in the 1980s, the market started to slide down. And then by January and April and March, it kind of like done its dump, sort of. It did a big dump in January, pushed back up in March, but then, continued to go down for a couple of years thereafter. And this was back from the time when people had, recessions. Remember, there was a thing called recessions. Like, sometimes just your life was going along as normal, and then the economy went to crap and your life got worse. There's that used to be a thing. It was kind of like when the pandemic happened, how life was going along as normal and then your life got crap, except there wasn't an economic recession at the time and there was a reason for it, but the charts haven't quite really reflected that yet. So it's like, where's the recession is what people are asking, and they look back and they think, well, we haven't really had one since like the major crashes, like the dot-coms and the great financial crash. But we actually have had them in the past. They do exist. They are things that exist where you get a couple of years of downward markets, and it was back then when you would get that sort of thing. So then people obviously think this could lead to a recession, and then of course they kind of get a bit more jittery and they think, what type of recession? Could it actually be like the 1970s and not the 1980s? Could it be like the 1970s when there was a recession that saw S&P 500 was really super high at $121. Yeah, different times, huh? Considering it's 6,900 currently, and it dropped all the way down to 61. Like, that's 50% drop in the value of your stocks, folks. That's a big decline. Could it be as bad as that, the recession? Or, you know, they like to, everybody likes to get a little bit dramatic from time to time. Let's look back to the good old 1929. Picture this: it's October, the weather's not that fantastic, it's raining cats and dogs, and then suddenly starts raining actual, you know, stockbrokers and investment brokers, managers and fund managers and all sorts, and insurance providers, and everybody started raining, and then the prices dropped down to real lows, losing 80% of his market. So is it going to be as bad as that? What are we looking at? What are we talking here? Are we talking Great Financial Crisis, GFC? Are we talking .com? Are we talking Black Friday, the one of these names for stuff that happened in the 80s? Are we talking the 1970s? It's like confusing because there's like a Black Thursday, and there's like Black Monday, and there's all these other ones. So there's like, that's why they started calling it things like .com and GFC, because you can't just keep on repeating it. And then, or is it back to the glory days, you know, the real glory days of like the 1929? Is it 5-minute warning, folks? Right, so I've explained the situation in terms of where we are in the world, right? Silver is at massive highs. The world is then looking at it saying, is there going to be a decline in equities? So it's resistant to move up. But meanwhile, what we're seeing, of course, is a move up in the Russell 2000, which is doing the best it's done since the 1980s versus S&P, which really speaks to the middle belly of the economy and where growth is. So my question then kind of comes down to, you know, if there's a big decline that comes in, sure, you could see something like from one of these periods here. You could look back to various times in the past and say these all had alignments, or you could look to how there's actually a disconnect happening, that silver and gold are really high, and ask a different question instead and say, how can we tell what's going on in the economy? Is there demand? And let me just say that there is a way of doing that. And we can look over here and we can see the oil prices. Let's just jump over to WTI, keep it nice and American, keep it fresh, right? Let's look at the $61 price that we're seeing in oil today, and the huge move up that it's had just recently, right? If we look at the 12-hour time frame, you can see here that it's just been rising up. And you can say, well, okay, is that because Iran is falling down, right? Is Iran falling down? Is Iran now doing this? Is Iran then going to actually start executing prisoners, and America maybe have to go over and commit to whatever it was that Trump said about you start firing, we fire back, or whatever the heck it was? It's like, oh, are we in that really crazy mess? Because that's the fear stuff. So fear is high. We understand fear is high. But we can also understand that Iran produces like very little oil in terms of, it's like, you know, it's not this type of supply shock. There is a hint, right, by the way, that that this isn't actually a supply shock that's happening in Iran. My personal theory is that the oil prices might be tried to be pushed up by Saudi Arabia, who recently tried to do a sort of attack on United Arab Emirates, we're major oil producing countries, and we see this happening here in Iran without any sort of fall down. It's not like the CIA are doing this sort of regime change. It kind of seems messy. It's more like disruptive. So there does feel to me that the Saudi Arabians, who don't make enough money from the oil, are annoyed at the situation and trying to create that. But I don't think actually it's a supply crisis, and it's not really representative, especially whenever America just took over Venezuela. There is a problem with Venezuela, by the way, just an update on last week's episode, that Exxon and so on say that the risk is far too high currently, and that's of course because the price of oil is far too low, so they don't even want to go in there. In fact, it's annoyed Donald Trump so much that he's actually thinking about administering punishments to ExxonMobil for not going to Venezuela. That's the situation that we're in right now. So there's a ton of freakonomics happening, and my main message of today's show, I suppose, is to be wary of economic textbooks in a world where it so clearly is a freakonomic environment, that some of the things which are meant to be good, like 10% limits on credit cards, might actually be bad, and some of the things that are meant to be bad, like really high prices on silver, it could actually show that there's maybe coming to a blow off top on the risk off attitude. If instead of it being that the silver and gold prices are so high because everybody's so ultra risk off and they think the world is actually going to go to war, and instead of that, it's that because there's been such high leverage on the short side that there's a squeeze happening, creating a blow off top that feeds into a narrative that allows that to happen of fear, where people begin investing into the selling of other people in the blow off top environment. What we would see happen would be a drop looking like the 1980s in those things, while there wasn't in the other markets, which doesn't normally happen, which will make everybody else say, oh my goodness, something that normally happens in textbooks isn't happening. And after the fact, they'll look back and they'll say Freakonomics. And we're here looking at it forwards and saying, be aware of the textbook economics, because what we're anticipating is Freakonomics. I did say to people that I would talk about the stuff from the Discord that I've spoken about in cryptocurrency recently, and I wanted to just kind of run through some of the stuff that you would have seen had you been actually, you know, paying attention in the cryptocurrency room. So over there on the 2nd of January, I wanted everybody to know that stuff was happening in crypto. And I was wanted to point out as well about the caution side of things. But it's too early to tell if it's another bull trap forming, or if it's a reversion to the reversion to the mean, which would have been higher than prices there at the time, or if there's actual interest building in the space. And there was a problem because the story, the macro, the protocol, the way the trajectory was going was down, and everybody was saying down. So it's like, how are we going to look at things turning around, and how would we do it? And I ran through it in a way here which was super exceptional, and the result of it was that everything played out exactly as I said. Exactly. And it was not just on the 1st, by the way, or the 2nd of January. I came back and I updated people. I spoke about the price targets of moving through $125, $130 on Solana and up to $140, explaining it and how it would all work exactly and the conditions that we needed to see. In fact, I agreed here with Bad Mama Jama in the Discord chat when he said, if it stays over 90, I'm happy. If not, I'm not a fan. When we were using an element about Bitcoin pricing to be able to assess how things would go in the charts for some other coins. And one of the things that I like to look at on the show, of course, is the others chart. And I've done it up for you today, folks, here, so that you get a nice view of the chart here, and puts things into a bit of perspective. And we've got three faces of the others that really describes things for us. There's Benjamin Linus from Lost. You might know it. You might be a fan. You might be one of those people who lived through the GFC like myself. Watching Lost as your only consolation as the entire world burned around you. And to be honest, looking back, it was pretty good consolation. I have to say, I'm almost okay with the great financial crisis happening since we got lost. I'm kind of 50-50. Anyway, here's the others. Benjamin Linus. He always has a plan. He says it there. It's right there in plain text. I always have a plan. And he said that. And then he's looking down here at this period of sideways consolidation on the others chart. This happened since 2022, all the way up to current times. And the way that it's come down is found support here, possibly on the 50 simple moving average, with a view to perhaps coming back up and challenging higher. Now, we all know that is a scary time. Scary. And this Benjamin Linus face here, Benjamin Linus in this picture is clearly looking at the latest headlines from Iran and thinking to himself, oh, this is not good, because that's thousands of people apparently, and they're really in great jeopardy, and that's going to cause issues. And he's looking at Venezuela and thinking, is this legal? Is this legal? I don't know. But then up here, as you see at the top, Benjamin Linus is happy and relaxed. And he's looking back afterwards, he's thinking, gosh, there was some freakonomics happening. So there's some freakonomics happening there for a while, folks. And that's what I wanted to finish the show on. All right. Okay. Just a bit of fun. The overall, the technical analysis on this one is consolidation, movements back up towards highs after having found some support in this area is reasonable to think if we do see momentum continuing on Bitcoin. Bitcoin currently at 97,000, challenging back up towards 100,000. Psychologically, big pivot, stuff to be aware of in the current time if you're trading those things. Drop a like on this video if I've done something to make you, feel some positive emotion at all during the show, because it might help somebody else and inform the YouTube algorithm that this video is worth watching, and someone else out there in the world like yourself might get some value from this video, or smile, or something might bring something to their day. So if you hit like, you're not doing it for me, folks, you're doing it for that other version of you who hadn't found this channel yet. So do that and be that change you want to see in the world. Hit like. Yes, thanks so much, and a big shout out to everybody who's tuned in to watch today's show. Awesome community, wonderful people. There's still an ongoing sale on my course that I'm doing, by the way, Save 500. And I've been looking at the chat as we've been going. I really do appreciate everybody who makes this a wonderful place to be. See you all again next week.